Hello everyone, welcome back to my channel. So this video is the first video of a new series that I decided to create. It's a bit of a reversal of what we have done when we did the Road to 100k Realized Return Challenge. This will be a reversal because, as you can see here, currently my trading account shows a very bleak situation at the moment. If you probably recall one of my previous videos, I decided to move away from stocks, from ETFs, which mimic the main indexes such as the Qs and other similar indexes, or even the IWM, and I decided to focus on metals. However, given the way things have turned out, the fact that the Fed is now aiming for interest rate increases, the fact that this will push the dollar further up, and because if interest rates rise, metals will become less attractive because they don't yield any return, they don't yield any cash flow, and so interest or income paying assets will become much more attractive if interest rates are higher. And so this was by all means a failed bet, and now we are in a hole, and a big one, because as you can see here, this is in euros, by the way. We are currently 88,467 euros and 52 cents. And now if you look here, and I'm going to use this number, if we put 88 and 88, 467.52, so 467.52. And as you can see here, this accounts for currently a little bit more than $100,000 in unrealized losses or so. In this case, what we will attempt to do is the following. And there's a twist that I need to explain a little bit later. But for now, just keep in mind, we have these positions. These are all gold and silver related ETFs. GDX is a gold miners ETF. This is similar to GDXJ, but for smaller sized miners, gold miners. The Yahoo is just an ETF that trades specifically the metal, gold. It's based on the metal itself. We have the SILJ, which is again for silver, but for junior miners, so small sized silver miners. And we also have the SLV, which is the ETF that tracks the silver. It's just purely based on metal, on the metal itself. And the objective of this new challenge, which we'll be starting today, by the way, for you to know, is the 24th of June 2026, as you can see here. And now the objective today, the objective of this challenge is to basically get rid of all of these positions, right, without a loss. So the objective here is to be able to exit all the positions at least at break even. All right, so we are keeping track of our cost basis for all of these ETFs, and so the purpose is that we will be, and this is not a question of if, it's a question of when, we will be exiting all of these positions at least breaking even. And in the case of the SLV, I am aiming to get a capital gain of at least $29,320. This is the capital gain that I'm aiming at for this one. And the reason for that is because in the past June the 5th, if you recall what happened on that day, and that day there was a big sell-off in the market on everything, equities, and also on metals, and it caused also a huge rise in the value of the dollar against the euro. And so what happened, and I also spoke very briefly about this situation in my video about the 5 lessons that I learned on the wheel. This was actually this is actually the focus of my bonus tip. What happened was that because my collateral was in euros, I simply did not have enough collateral by the end of the day to cover all the puts that were going to be assigned to me, because all the positions fell by 8-9%. And so, because the collateral was not enough, I was forcibly liquidated of, at the time, 2,100 shares of SLV. I had a very tiny cash position which was negative. My cash position was negative by 20 or 30 euros, give or take, and I was liquidated forcibly of the 2,100 shares, so 2,100 shares of SLV, to cover this 20 or 30 negative cash position, because my account is a cash account, so I cannot have negative, I cannot use leverage or margin, so I cannot have a negative cash position at any time. And so what happened was that I was liquidated at a huge loss, and then because it was a disproportionate measure by the platform, Interactive Brokers, I requested the refund, and not the refund, but the reversal of that liquidation. And so, by pure luck, I think, they decided, all right, we are going to reverse the position, but we advise you, please make sure that this does not happen again. And so, at this point, I decided, all right, let's always convert our euros to US dollars, and for good reason, because here, as you can see, the dollar continues to gain value against the euro, so having collateral in euros has become a very dangerous proposition, because the dollar continues to gain value against the euro. And so they gave me the 2,100 shares back, in addition to the 2,900 that I bought on that specific week. So I got a total of 5,000, and then I was assigned three more puts on the SLV. So and now we stand at 5,300 shares. So now the point is that even though they made the reversal, I can show you here my performance, and I'm going to zoom a little bit more on here. And here, there's a point, this specific point here on June the 5th, this large fall, which was realized because of the forced liquidation. And this should never have happened, because the liquidation was reversed. But they did, the Interactive Brokers did not update the chart. They left this loss in here. And so my objective is to basically recoup this loss, even though I did not lose anything, because the liquidation was reversed. I want to reverse this glut, this fall in the performance chart by having a capital gain. And also because it's always good to have capital gains, and I decided, all right, why not? Let's try and fix this. And so, even so, it will not change anything, because I will have this capital gain of almost $30,000, but in the performance chart it will not show, because it will just be an offset of a loss that never existed. So again, this is just for me to try to reverse this problem, but we'll see. For the time being, what we will be doing is the following: is, because we are in this position, which is of course a very serious one, what I'm going to do is do what I already did many times. We will continue to deposit money and we will continue to sell puts on these positions. I've been focusing most on silver because that's where I think that, because the losses have been so significant, I think that that's probably where we should focus on for now, because my attempt is, all right, you don't, with a smaller recovery, we can get rid of those positions, and then we will be able to start, once we get rid of the silver positions, we start to work on the gold positions. Of course, because assuming that they will move together, which they usually do, gold and silver, we will be working on the silver positions first because they are more volatile, so any dip in the prices will give us a better opportunity to lower our cost basis with the deposits that we make. And so this is for now the plan. At this point, with such a large position here, we won't be able to make much of a dent in the cost basis unless we also buy another buttload of shares. So now the plan is to try to get rid of, especially this one, the SILJ for now, and see what happens. For the record, here are our cost bases. For the GDX, we bought 400 shares at 91.5. For GDX, we bought 300 shares at 121 and 400 shares at 122. So this is our cost basis. But we are still assuming that we'll have to sell at 122 at least. And that's why we have these calls over here at 122. Carrying on from here, IAU, we have 800 shares. 4 of them we bought at 86.5, and another 4 of them we bought at 82. So cost base is 84.25. So we have to sell at least at 84.50 to get out of the trade. This will give us a small capital gain, but that's the whole point. For the SILJ, we already have 300 shares. We bought 100 shares at 33 and 200 shares at 29. This gives us a cost basis of 30.33, so we have to sell at least at 30.50, which is the call right here. And the more complicated one, the elephant in the room, is the SILJ. First, this is not in the correct order of which we bought the shares, but basically we bought first 200 shares at 76.5, then we bought 1900 shares at 75.5, then we bought 1800 shares at 65.5, 1000 shares at 64, 100 shares at 61.5, and then we bought 60 shares more recently at 300. 300 shares at 60. Because we always put the price first and then the amount of shares, and divided by 5,300, it gives us this amount. But keep in mind what I mentioned, we want to get out at least with a capital gain equal to the loss that we had from the forced liquidation, plus the commissions, because we had to pay commissions on the liquidation. And so remember that this will amount at 29,320. So this will be more or less the amount that we have to recover, and this will give us this amount. This amount, and I made this account here, if we sell the 53 calls, so we promised to sell the 500 and 300 shares at 74.5, because it's 74.5 minus the cost basis times 5,300. This will give us a capital gain of 29,950. And so we are aiming to sell these shares at least at 74.5. And that is why we have here these 53 calls with the strike price of 74.5. And we also have here another put to try to bring this further down. Even though it's only one put at 52.50, it will not make much of a dent, but it will at least, it will be a step in the right direction. So you see there's a lot of information to consider. Again, just to make a wrap up, The goal is to try to get out of all of these positions, at least breaking even, and keeping in mind we will have to leave this position, this 500. Well, it will be whatever position whatever size of the position. It will be more shares for sure as we continue to buy them, but we'll have to leave this entire position of SLV at least with a $29,320 capital gain. All right, so break even at least on all of them. So this will be the strike prices. So 91.50, 122, 84.50, 30.50, and 74.50 on the SLV, which because the objective is to have this capital gain, this strike will be a moving target as we continue to get more shares. And of course, when we buy more shares of these other ETFs, of course the cost basis will come down and the strike prices will also come down as well. But the objective is to break even at least and to get this capital gain on the SLV. Now, I know this is a lot of information to take in again, and there's another twist that I need to show, which is the following. Because now I'm no longer in Europe, and I want to use my dirhams from the United Arab Emirates. I want to use them for this challenge. But I cannot deposit dirhams in an inter-European account. I decided to open another account on Interactive Brokers, and I'm going to show the account right now. As you can see here, looking here at the settings, this is my account, this is my name, right? And so this is it. Now let's go back to where we were and let's move into my United Arab Emirates account and show you what's going on over there. All right, so here we are. This is our account from the UAE. You can see here at the settings, right? This is my name, all right? This is an account from the United Arab Emirates. And now, as we stand at the moment, you can see here that I deposit already several Arab Emirates dirhams, and this will be the currency which we will use to deposit additional funds. For those who don't know, this will make things a lot easier because, and I was very much looking forward to this because for those who don't know, the Arab Emirates dirham is pegged. It has a fixed peg to the dollar. Each dollar is 3.67 plus some change of dirhams. And so with this, as long as we deposit dirhams, we don't need to make any currency exchange. The exchange rate risk is completely eliminated because whatever moves the US dollar does, the Arab Emirates dirham follows. And I can even show here. So Arab Emirates dirham, let's see what it is. Arab Emirates here. So here you see, it doesn't really matter. These are very small spikes, but you can see here over the course of a year, there is a currency peg, a very, very fixed peg. There are very, very minute deviations, but it's normal. Whoever controls, in this case the central bank, because it controls the exchange rate, it just simply acts the market as soon as possible to keep the currency at the same rate. If we reverse this, we just put here $1, and you'll see that it's 3.67, and this is a fixed rate. And so, as we stand, I've already deposited some additional funds today. There will be more to come, much more to come, because now I have the dirhams to deposit. We have already sold 2 puts here on SILJ, because we are working with a cost basis which is not that far from the current price of SILJ, and so I believe that as soon as we have some recovery, the entire position will be liquidated, at least breaking even, and then we will have some more funds to start working on the other positions. And so this is where we stand. The break-even points and the capital gains will be calculated across both accounts, because I cannot use only one account at this point, because I still want to remain capable of depositing both euros and dirhams on both accounts, and if I have only one account it will not work. So this is where we stand, and this is how we will continue to do it. These amounts are in dollars, are not in dirhams. They are in dollars. I decided to set up the base currency in dollars, even though I'm depositing dirhams, because the positions of the securities I will trade, the options and ETFs, are all denominated in dollars, and that's why I decided, unlike with my European account in which I use the euro as the base currency, it was a mistake, because we have to account for the exchange rate changes. And so now there will be no more problems with exchange rates. First of all, because the currency is pegged with a fixed peg, and the account is all denominated in dollars, just like the securities that we will be trading. And so at this point in time, we will be just looking at the gains and losses without any exchange rate interference, which is the way to go. And so for now, this is it. This will be a very, very tough challenge to tackle, but I'm sure that this will be very, very satisfying when we finally finish the end. I have no idea how long this will take. I'm going to try to make it as quickly as possible, but we don't know how much it's going to take. But eventually, we will get there. That is an absolute certainty, because we will keep depositing money, and because of that, we'll continue to lower our cost basis more and more and more, and eventually we will lower the cost basis to an extent in which it will not be necessary for the gold and silver to go back or to recover to where they were when the positions were initially acquired. The first few positions were acquired. We will need a much smaller recovery to get out of the positions without any losses. And so, yeah, we'll stay in touch, and I'll see you all in the next one. All right, and we are just seconds away from the beginning of the session. As you can see, the losses have deepened even further, 98,665.41. The market has just opened, and now let's see where we stand at this moment. And I put the numbers in here, and we are currently standing from almost $112,000 in unrealized losses. So this will be our starting point, so that we can start recoup those losses. It's entirely possible that those losses will continue to compound further and further, but yeah, we will try to catch as many shares as possible at these depressed prices, and hopefully work our way up, back up when eventually things recover, which can happen. Yeah, we don't know when, but eventually at some point in the future they will. So yeah, let's see what happens.